Good afternoon, everyone. Welcome back to another episode of Dentist Who Invest, episode number 21 of the podcast. Thanks for everybody who's listened to it so far. I can't believe that it's lasted as long as it has. Every day seems a blessing to me, and I just really love doing it. So I'm really thrilled to be able to present it to everybody. I'm glad that everybody's finding so much value. Hopefully, many more episodes to come. Today we have another guest on the theme or topic of houses. She is someone who was recommended to me by Harry Singh, a man who's definitely in the know when it comes to houses. So I think any recommendations of his definitely speaks highly as a credential or on your CV in terms of the level of standard that these individuals must be at. Because Harry, of course, he has been doing houses for a long time and he really knows his stuff. We are very privileged to have her here today. She is a mortgage advisor, but she also specialises on dentists. I hope I've described you accurately there, Sarah. Her full name is Sarah Grace. Welcome to the show.
Hi, James. Yes. No, that's very, very good introduction. Yes.
It's all
Happy
right.
with
Good
that.
stuff. Yeah, good stuff. Don't let it all go to your head, though, Sarah. I know that you won't. But no, I have to say, Harry is very competent, and he really, really knows what he's talking about. So it's definitely a positive thing or something that's you came highly recommended by him. So you must be good at what you do. Is all I can say. So Sarah, we have of course never met until now, and there'll be lots of people on the group who may not have heard of you. So I was wondering if you could just do a brief intro about who you are, what you do, and how you help dentists specifically.
Yes, yeah, that's great, James. Yes, well, I've been in the mortgage industry for about 27 years. So I've got quite a lot of knowledge and experience on the mortgage side. I've been working predominantly with dentists since 2004. So I understand the dental career path, the foundation dentists, UDAs, that sort of thing. So I understand the challenges that dentists have when they're coming to get a mortgage because they're self-employed. I understand, the self-employed, whether it be sole trader, partnership, limited company, understand all of those different types of incomes. I'm actually self-employed myself. I went from a sole trader to a limited company. So I really do understand that transaction as well. We've got about 540 dental clients. So I've done a few mortgages for dentists over the years. So don't hold me to it, but I think I've probably come across most income situations, but I'm always up for a challenge of a new one.
Cool, fair enough, good stuff. And is that mainly people who are looking to buy houses to live in or buy to lets and other arrangements for mortgages?
A bit of both, really. I would say it's predominantly residential, but obviously because of Harry Singh, he does. It is buy to let. So his clients that he has that are looking to build portfolios by to lets, be it starting a portfolio or increasing their portfolio, we'll do that as well, and that can be buy to lets in their sole name or in a limited company. We do both.
Cool. And I know that you're an advisor or you help dentists in the process of getting mortgages, but just spell it out exactly. Where do you fit into the process? Should someone come to you before they've procured the mortgage, or where do you just fit in exactly in that process? For anybody who's going through buying a house for the first time, because I've never bought a house, you see, and I'm sure there'll be other people here who are in the same boat as me. So I don't even know the first stage, the first step about the process. And I'm just wondering at what part you get involved.
I would say I always prefer speaking to clients before they've even started to look for properties, because we do have clients that come to us and say, I've had a offer accepted on a property. Can you get me a mortgage? which is absolutely fine. Don't get me wrong, but then we've got our backs up against the walls, and sometimes if estate agents are being, well, we won't accept their offer until we've got a mortgage agreement in principle. It can all be a bit stressful for everyone. So what I would say is get in touch with us. Let's have a chat. See what you want to achieve. I'll talk about deposits because at the moment, the big thing is deposit makes a massive difference on your interest rate that you pay. So it might be that the deposit isn't quite big enough, or it might be that you can talk to banker mum and dad, being as they're doing about 7% of the lending in the industry at the moment, or something like that. I can give you an idea of what the monthly costs are going to be on your sort of, if you've got normally you've got a sort of price range in mind of what you want to buy, and then we can talk about that. It might be a case of, this time of year, we're coming close to the end of the tax year. It might be, look, if you hold fire until the 6th of April, get your accountant to do your tax return. We're going to have so many more options if we leave it till then. We can talk about lots of different options then, whereas we don't have the options if you've already got a property and your offer's been accepted.
You know what? I almost felt a bit silly asking that question, but I'm glad that I did, because I definitely would have come to you after I already had the house sorted. Yeah.
Yes.
Yeah.
Yeah.
Call me naive, but like I say, it almost felt like a silly question when I was asking that, because I thought, okay, most people who are listening will probably know the answer to this, bar me. But anybody out there who, I can't imagine I was the only one who thought that, and I'm glad that you set us straight there, really. When you say your backs are against the wall after the agreement has already been made, why is that?
Well, it's just estate agents predominantly are the banes of our lives. They put everybody under pressure. Or they might say, well, we won't accept your offer, or we won't allow you to go and view a property unless you've got an agreement in principle, which is what we've had a lot of just recently. And that's understandable because the market's been incredibly buoyant. By coming to us under pressure, it puts you under pressure, it puts us under pressure. And at the moment, because we're incredibly busy, we can't perhaps just be as reactive as we are some other times. So the thing is by just speaking to me, beforehand, there's no pressure. You can fill out we've got a client portal. You can fill that out over a weekend at your leisure, rather than staying up till 2-3 a.m. in the morning doing this.
Okay, fair enough, cool. So obviously you've been doing this for a while. I'm sure there are some classic mistakes that you see quite frequently. How can we generally be more savvier as borrowers who are looking for a house, and what do we need to look out for?
There's a few things. With regards to obtaining a mortgage, there's some simple things like which we get an awful lot of, especially if you sort of just finished your foundation year and you've not been long out of uni. The amount of clients that aren't on the electoral roll, which lenders prefer to see you on the electoral roll. So that's one big thing. Another big thing is that your documents don't tally with where you're saying you live. So a lot of people just leave everything registered at their parents' address.
Guilty.
Yeah. So you put on the application form that you live in London, but your parents live in Birmingham.
Do you know? I'm listening to these no-nos right now, and I'm just ticking off every one so far. I'm ticking off both of them. That is me.
And just lenders don't like it when everything doesn't tally, which you can understand, because when they're looking at applications, they're looking at fraudulent applications as well. And those are the classic things that they pick up on fraud. And we all know that it's just that the amount of people that say, oh, I thought it'd be better to keep it at my parents' so that I don't keep on changing address. But that's not always the case.
Yeah, again, me, and that was the main reason why. Because
Yeah.
I mean, when I was a student, you move every year, don't you?
Yes.
And
Yes.
dentistry's 5 years, so it's even more of a faff. You have
Yes.
to keep changing, and yeah, I can see it from. I can see why someone might do that. So would that mean that these banks or whoever the lender is would give you poorer interest rates, or would they just make you jump through more hoops to prove who you are?
Well, no, I've got one lender that if it was with a 10% deposit, if you're not on the electoral roll, they'll decline you.
Right, yeah, fair enough. And am I right or am I wrong in saying that depending on how long you've been on the electoral roll, does that make a difference either in terms of the terms that they might give you as far as interest rates or how much they expect you to repay? Does that make a difference?
It's not so much the interest rates; it's whether they'll approve you for a loan or not.
Right. Okay.
So the thing is if you've been registered with mum and dad on the electoral roll, well, that's fine, but just move the electoral roll registration to where you're living at the moment. They've still got a continuation of you being on the electoral roll somewhere.
Oh, okay.
But if you can be at your current address, that's the best.
Good stuff. Cool. What about specifically for dentists then? What are the kind of typical things that you can do to help us as dentists get better terms on our mortgage? So I know that obviously a lot of dentists are self-employed, and what some banks do is they insist that you have 2 years payment or wage history. So maybe you can offer them, point them in the right direction of somebody who can lend to them. That could be one of the ways. I don't know if there's others.
Yeah, there's I would say the majority of lenders want 2 years account. So if you think about you finish your foundation year in August, you start your associate position in September. So your first tax return that you do will be up until April the following year, but then that's only going to have 7 months of earnings. So really, you've got to have 2.5 years of earnings before you get a tax return with a full years of self-employed figures. So what we have is we've lenders that will work off your. So I'm actually doing a couple of mortgage currently where two people have finished their foundation year in August, and they started associate positions in September. So what we've done is we've got a principal's reference who have confirmed the UDAs. We've got their copy of their pay schedules from the practices that they work at. See if that tallies with what the principal's saying, and then send that to the lender, and they will work off the UDA figure.
Right, I see. And then at that point, they can usually get credit.
Yes. So if you do, for example, 6,000 UDAs at, let's make it easy, £10 a UDA, they will look at your earnings as 60,000 a year, and then they will base their lending decision on 60,000 income.
Oh, brilliant. So it's not as black and white as we always have to wait this 2.5 years.
No.
Excellent. I wish I would have known that sooner because I delayed. Well, I had been delayed, but I have delayed buying a house for a little while because I was under the impression that you had to have this 2.5 years worth of credit. But what had happened to me was I went to Santander one day and I spoke to someone, and they were behind the desk, in there. I had a one-to-one meeting, I suppose.
Yes.
And because they weren't familiar exactly with dentists and their pay schedule and their arrangement, because it is a bit of a unique one, they just simply said to me, "Oh, you'll have to come back in 2 years." As soon as they heard the word self-employed, but it's not as black and white as that.
No, we have got lenders, and I've educated lenders over the years, and I do have some exclusive criteria off a couple of lenders.
I see. And am I right in saying these are usually high street banks then that give this credit, do the lending,
They're
or
they're
people who
they're
are less well known?
they're not your nationwide Santanders,
Yeah,
high street, but they are sort of really reputable, sort of well known lenders, but they're perhaps more regional based rather than national high street lenders.
really valuable bit of information that about the dentists being unique in that they can be self-employed but still obtain a mortgage despite
Yes,
not having. That is a really valuable piece of information. Actually, I wish I would have known that sooner. I'm sure that's helped a
yeah.
few who are listening. That can't be the only issue you come across. It must be a little more complex than that. There must be other things that you see.
The accounts is probably the number one issue that I have. The other thing at the moment, which is really specific to the market at the moment because of the pandemic that we're in, is deposit is really key on the type of rate that you're going to pay. So if you we have now lenders with a 10% deposit that will lend, whereas only 2-3 months ago there was near on no lenders that would lend with a 10% deposit 2-3 months ago. We're back into we do have lenders. There's a bit of competition. Rates are coming down. But even with a 15% deposit, rates are probably still sat at about 1% more than what they were pre-pandemic. Deposit is really key. The one thing that I am sort of advising clients at the moment is probably to consider a 2-year fixed rate over a 5-year, because then that means that you can switch the rate in 2 years' time, and hopefully the market will have settled down a little bit in 2 years' time, and we'll be back to more of the pre-pandemic rates, because the cost of funds on the money markets, which is what lenders secure the rates on, that they are no different to what they were 12 months ago.
Aside from what you've just mentioned, is there any trends that you've noticed at the minute, given the whole COVID pandemic? Anything that's changed in the last 12 months?
No, I would say that London has quietened down an awful lot because we're national. We do all of our client calls over the phone and that. So I'll deal with any client anywhere in the UK. So London is really quietened down, but that's probably what's happening nationally anyway. I think they in one of the Sunday papers not very long ago, I think they said 76,000 people have moved out of London. So that probably sort of tallies with what I'm finding. The London market has quietened down. So whether that's a up and coming market, whether there's going to be some deals to be had in London, that might be the case.
Yeah, well, you might guess that that's because obviously London is obviously with COVID going on and London being so compact that people are trying to get out of the city, and
Yeah.
maybe fingers crossed when all of this calms down, they might return again.
Yes.
That's the
Yeah.
theory, I suppose, really, isn't it?
Yes.
But
yeah, so that London might be an opportunity, but other areas, sort of more rural areas, and that we're seeing a lot of people buying, a lot of first time buyers. We're dealing with at the moment. So yeah, a lot of mortgages generally.
yeah, fair enough. Well, a lot of demand at the minute because of the capital gains. Oh, sorry, not the capital gains. Stamp duty holiday.
Stamp duty holiday.
Yeah.
Yeah,
How do you
yeah.
expect that to pan out over the next few months?
Well,
Do you think
I
it'll
think it
return?
will end.
Yeah.
Yeah, it will end. Well, that's my opinion. But don't forget, if you're a first time buyer, I assume that the government will put back in place the first time buyer stamp duty scheme that they had prior to the stamp duty holiday. So up to 500k, you still had a good discount on a stamp duty. So just because you might have missed the 31st of March deadline. Doesn't mean to say that it's not going to be good to buy post 31st of March.
Do you think there might even be an increase in stamp duty? Or too hard to call? Tricky question,
I think that's too I've been in this game for too long to try and predict what's going to happen.
Well, it's like anything really. I mean, anything finance, you have your predictions and your models and your theories, but what happens in money is just a reflection of what happens in society quite often, and it's really hard to predict what happens in society and therefore by extension what happens in finance. Same reason why no one really knows what's going to happen with the stock market. People guess, but you never know for sure.
You'll never know until after the event, and that's the thing is in theory everybody wants to buy at the bottom of the market and sell at the top, but when people say to me, is it a good time to buy, or when's a good time to buy, the question that I always ask is, buying in, or investing in property, it's a long-term investment, and as long as you invest for the long term, you will always, based on any past performance, you will always gain. And if the alternative is to rent, I'm now quite often doing mortgages, and people are saying, gosh, that mortgage payment is cheaper than my rent. And the thing is mortgage payments, they're paying back the capital. They're not just paying the interest, which is what rent is. It's dead money. You're never going to get it back.
Yeah, of course. Fair enough. Well, I think that's the main reason why, as a renter, I need a good kick up the backside to just go and buy a house. So yeah, I really need to get around to that, because as you say, it's money into a black hole, and with a mortgage at least you're actually contributing towards something. Presumably you say that buying a house or a property is a long-term investment because of how many tax implications there are when you try to move it on.
Yeah, well, there's no capital gains tax on sale of a personal private main residence. But the thing is to buy and sell does cost quite a lot, because if you've got stamp duty to buy and then to sell, you've got agents' fees.
Yeah.
And then you'll probably buy again, so you've got stamp duty again, you've got solicitors' costs. I would say on buying and selling, sort of standard, you're selling at 300, buying at 500, which is probably the second time move that I do quite a lot for people. You probably look on the sale and purchase, you've got 20 grand's worth of costs with stamp duty.
Wow.
So my view is to borrow as much as you can at the beginning and try and take out one of those moves, because every move costs you about 20k.
Yeah, fair enough. Well, that is why I know that some investors, they have a bit of a bone to pick with property, just because it's, inverted commas, illiquid, so it's difficult to move at the drop of a hat, But obviously houses, they're a special case in a sense as well, because you need to get your first house, just so that you've got somewhere to reside, and as well as that, so you're not chucking in money into a black hole, which is effectively what renting is.
Yes.
Just another way of looking at it. But there's not to say that you can't argue a case for them being part of a diversified portfolio, but maybe a portfolio that is wholly subsisting in houses. Well, there's a few downsides to it, basically, but you'll know more than me, Sarah, I'm sure.
Yeah.
I think that's a reasonable thing to say. So, given everything that we've just said, what do you think about buying at the minute? Is that a good idea or a bad idea?
Yeah, I don't think there's any particular good time or bad time. You only know after the event whether it was good or bad to buy. So that you've got to do it for the right reasons. If you want to make a fast buck, I would say that it is risky. if you want to make a fast buck and be in and out of the market quickly. Um, uh, and also, if it's your home, well, does it really matter if it's going to cost you, an extra £1,000 a year for the next 20 years? It's your home, and having a home is possibly quite important, especially in today's. We're all spending so much more time at home. Having a nice home and having the right home is probably more important than anything else.
Yeah, fair enough. Yeah, like I say, I suppose it comes back to that special case, what we said earlier. Well, houses are a special case, and because you need one, then it's worth going out of your way to get your first one just so that you can save money on rent. But after that, it's more of a conundrum and difficult to say how things
Yes.
pan out because of
Yeah.
stamp duty, because of, well, what way the market's going to go after that. Difficult to say. If I'm gathering
Yeah.
what you're saying correctly.
Yes, yeah. If you're buying as an investment for buy to let, and that, obviously you want to try and play the market a little bit more. But at the moment, obviously, there's up to 15k incentive by not paying the stamp duty on a purchase of 500k. So that's quite a good incentive to buy now. After April, I don't know. It depends on how the economy does. They're all talking about a strong bounce back because of the vaccine that we have. Which, if that's the case, well, yeah, carry on buying. But it might become more of a buyer's market in April because there's so many transactions that are going through now. It might become a bit more of a buyer's market. So negotiate the hell out of the purchase prices.
Fair enough. Is that something that you do a little bit of then, flipping houses?
No, I've not. I've always bought and hold. But I did sell one recently due to the stamp duty, not stamp duty, sorry, due to the taxation of buy-to-lets. One that didn't create much profit. It was actually an ex-main resident, so I never bought it as a rental, and it wasn't a particularly good yield rental, but I didn't want to sell it. But I did sell it once the taxation changes came in, because it was going to cost me to keep it, so it wasn't worth keeping. So yeah, but all the buy-to-lets I've ever had is I've bought to hold. Yeah.
Really interestingly, we had a chap on the last podcast who was, how can I say, not a fan of buy-to-lets, and he said that it's actually very difficult to make them profitable these days. What's your take on that?
Yeah, I think certainly anything south of Birmingham, you're probably correct, because I know when I first bought my buy-to-let, I'm looking at 20 odd years ago, I'd be working on a yield of 10%, and I wouldn't do anything unless I got a 10% yield. Now, that 5% is deemed as a good yield.
Yeah, fair enough. So north of Birmingham still worth your while?
Yeah, I
If you've
think
got the
so,
right
because
area?
you can pick up houses for just over 100k. You've not then got massive deposits that you've got to put down, and the rental yields are a lot better.
What sort of rental yield should we be looking for then?
Well, it depends, and like probably Harry's a better person to ask. It's
Okay.
what's your aim? What's your goals? Are you buying to have capital growth, or are you buying for a yield? Because I tend to think that you either go for one or the other.
Yeah.
You're very lucky if you get both.
Harry says something similar actually.
Yeah.
Yeah. So no, I was just wondering if you could maybe give a bit of a figure in terms of yield returns every year that someone might want to, you might expect to make a buy to let profitable. But
Well,
yeah, but if maybe it's not necessarily what you do every day, like what Harry does.
yeah, like the thing is from a lender's point of view, most lenders will stress test it at a rate of 5.5%,
Right. Yeah.
unless you go for a 5-year fixed. So really, lenders are saying that they expect you to get a 5.5% yield, because otherwise they might not think that it's worth having. But you can get mortgages with a lower stress test, but you have to do a 5-year fixed rate to get that.
Totally understand. Yeah, well, I was actually planning on asking you if you had any hot tips in terms of where we might look for rental yield or capital growth, but I'm not necessarily sure if that's your forte. Is that something that you might be able to
Yeah.
speak on, or?
Well, I would I like, as I say, we are national, but I would one of the things that I would always say is the location. Um, don't buy the most expensive house on the street, because there's very little growth in that property. You're better off to buy a smaller house in a nicer area. Um, and yeah, but if you're looking at, I know I mentioned London before, I don't just deal with London, but if you're looking at London, but being by a tube station is going to be more popular. If you're in a rural area, you know just don't buy the most expensive house, or the most expensive house on the estate. If you're buying on a housing estate, and if you don't know what how do I check out what those properties have gone for, you can always go to Rightmove, and there's, instead of looking at buying, you can look at sold prices, and you just put the postcode of the area, and then it will tell you all of the houses that have sold in the last sort of 10 years in that area.
Oh, that's a good top tip actually. So that's a little bit of market research, an easy way of doing market research, isn't it?
Yeah, yeah,
Oh,
yeah,
okay.
that's
Stands to
it.
reason that. So you can't give us any hot tips in terms of areas? Harry Singh said Grimsby had good
Oh,
rental yields.
right,
Yeah,
Grimsby. Yeah, it's cold
according to
cold
him.
up north.
Yeah, yeah.
Well,
But
that's,
I take it that's because the houses are cheap
yes,
in the first place.
probably,
I'm
yeah.
guessing. Yeah.
And that would be good for a rental yield. I would have thought as well, and also if you like fish, that would be a great area to live.
Do you know I used to go to clinic in Hull.
Oh, right.
I have never been somewhere so cheap.
Yes.
In terms of stuff that you can buy in the shop, it's insane.
Yeah.
It's like
Yeah.
not even. It's like it's another. You're on holiday. Those sorts of
Yes.
prices, like in Thailand or something, it's
Yes.
absolutely incredible. Like you literally do a double take because everything is
Yes.
so cheap. But it's right next to the sea, I guess. So yeah, fresh off the boat into Hull. I don't really know exactly why, but if anybody wants a cheap day out, I recommend Hull for anyone that's listening. Smashing. All right. Well, thank you so much, Sarah. There was definitely some good tidbits in there for anybody listening. The 2 years, well, the not necessarily having to wait 2 years is
Yes.
if you didn't take anything else away from this podcast and you're a first time buyer and you're a dentist, that is a golden nugget right there because
Yes.
I did not know that. I did
That
not
is
know
the
that.
biggest myth that I have of any dentist that calls in saying I've been told that I need to have 2 years.
Yeah, 100%,
Yeah.
100%. Because what happened to me, and I'm sure it's happened to other people, you'll get someone in a bank, they're a tick box person, or they're just, they kind of greet everybody and they don't really know the specific nuances of dentistry. Then, for that reason, they mightn't be in the best position to inform you of where you stand on that. So, we're hoping that has went some way to dispel that myth, and
Yeah.
I could have done with using that. I could have used that information a lot sooner, most definitely. So thanks for that from me
No
on behalf
problem.
of the viewers. Wonderful. Okay then, Sarah. Well, thank you so much for giving up your time today to come on the podcast. Is there a way that anybody in the group can get in touch with you should they be interested or want to learn more?
Yeah, we've got you can phone me, you can email me. We've also got a website. The website's www.sarah-grace.co.uk. Yeah, so we've got lots of things on there about, we've got, you know, the no accounts, the 1 year's accounts, all of that. If you want to read up any more information on that, on the website there's a link for Let's Talk. So if you want to get in touch with us, you can contact us via the website. Our phone numbers 0203 633 888. So that's fine. I'd say, you know, if anybody wants to just have a chat with me, we don't charge to have a chat. I want to help people. You know, that's what I'm about. I want to help people. I want to help make sure that people get good deals. And that's, so yeah, just get in touch.
Okay, well, thank you so much, Sarah. It's been an absolute pleasure having you on the show.
No, that's lovely. Thank you so much for the opportunity, James, and you have a good day.
No problem, Sarah. Absolute pleasure, and thank you so much for all the value that you've given us. Hope you have a wonderful day, and we'll speak very soon.
Yeah, take care. Bye.